Welcome to today's market report. European stock markets pushed higher on Thursday, with investors overlooking some weak corporate earnings and outlooks after fresh reassurances from Federal Reserve Chairman Jerome Powell that monetary policy will stay loose for the foreseeable future. DAX in Germany traded 0.1% higher, CAC 40 rose 0.4%, FTSE 100 climbed 0.3%. The European earnings season was in full flow on Thursday, with a number of influential companies reporting results. Anheuser Busch Inbev stock fell 5.2% after the world's largest brewer warned higher input prices could squeeze margin this year. The company's net debt burden swelled to 4.8% times basic operating earnings last year, as the pandemic frustrated its attempts to slim down after its debt-financed takeover of SAB Miller. Bayer stock fell 3.9% after the German pharmaceutical and chemical conglomerate posted a 78% fall in fourth quarter net profit and cut its dividend by around one-third, while Standard Chartered stock fell 4.7% after the UK-based bank reported a sharp drop in annual profit even as it stored its dividend. On the flip side, Anglo American stock rose 4.4% after the mining giant enjoyed a strong end to 2020, helped by rising prices of key commodities, and AXAF stock rose 2.2% after the French insurer proposed a dividend, even as its 2020 earnings were hard hit by the pandemic. Additionally, Aston Martin stock soared 10% after the carmaker predicted a brighter 2021 after a deep loss in 2020 when it raised fresh funding and changed boss to cope with the year's difficult conditions. Global equities were boosted by Fed Chief Powell calming fears that higher inflation rates could see the central bank tightening monetary policy, reiterating the central bank's desire to get the US economy back to full employment. This dovish tone was matched on Thursday by European Central Bank board member Isabel Schnabel, who stated in an interview that raising interest rates too abruptly could jeopardize economic recovery. Looking at economic data, German consumer confidence improved in March as shoppers in Europe's largest economy became more upbeat that a lockdown to contain the COVID-19 pandemic could be eased soon. The GfK German Consumer Climate Index came in at minus 12.9 in March, an improvement from minus 15.5 the previous month. Oil prices pushed higher on Thursday as reduced levels of US production on the back of last week's cold snap in Texas continued to support the market ahead of next week's meeting of the globe's top producers. Crude futures traded 0.8% higher at $63.72 per barrel. Brent rose 0.9% to $66.74 per barrel. Gold futures fell 0.5% to $1,788.90 per ounce. On the FX front, the GBPUSD pair refreshed daily lows during the early European session, albeit quickly recovered few pips thereafter. The pair was last seen trading near mid-141, up around 0.1% for the day. Following an uptick to the 141.70 region, the pair earlier witnessed some selling and quickly retreated around 50 pips in the last hour. However, a combination of factors helped limit any further decline. Instead, assisted the GBPUSD pair to attract some dip buying near the 141.20 region. The British pound remained well supported by the impressive speed of the coronavirus immunisation campaign and the UK government's plan to ease the current lockdown measures. The development seemed to have lifted hopes for a swift UK economic recovery and dampened prospects for any further rate cuts by the Bank of England. This, along with the prevalent US dollar selling bias, continued lending some support to the GBPUSD pair and might help limit any meaningful slide. The USD was pressured by Fed Chair Powell's dovish comments, reassuring that interest rates would stay low for a long time. Apart from this, the underlying bullish tone in the financial markets further undermined the US dollar's relative safe haven status against its British counterpart. That said, overbought conditions on the daily chart might hold bullish traders from placing aggressive bets. The euro trades on a firm note and pushed the euro-dollar beyond the key 122 barrier for the first time since mid-January. The dollar index was at 89.6, the lowest since January, and dropped to 3-year lows against the Australian and Canadian dollars after dovish signals from the Fed chair boosted the reflation trade. This is today's market news. Thanks for listening. We'll see you next time.